First, before I begin, actually, everybody has been saying this, but it is truly an honor to be here in front of all of you, especially the board, and actually our classmates. And Flavio and Kathy have been a great support, not only for us, but for the whole old classmates. And I was given this opportunity by Flavio last semester. It was complete challenge. We pulled it through, and I am honored again to stand here before you, pull my team through as a whole, and actually build this presentation for you. So to begin, we're actually the materials sector. My name is Sebastian Geraldo Castaño. I'm the sector manager. I have Natalie Bonseminski, actually my associate manager, and we have David Rodriguez, my senior analyst. So I'll be handing it over to Natalie to introduce our company industry overview.
Thank you, Sebastian. As you can see, our S&P 500 is outperforming the materials sector when it comes to industry performance. However, we believe that the materials sector is undervalued and that it allows us, or that it gives us room for growth in the future. Our main drivers within the materials sector is GDP, PMI, and commodity prices. Now, looking at global GDP growth, we expect again it to increase in the future. That means for us that there will be a higher output in the future and a higher demand for production products, so that at the same time there will be a higher demand for materials. Now, looking at the Purchasing Managers Index, I should probably first explain that anything above 50 means that the manufacturing industry is expanding, and anything below 50, it's contractionary. As you can see, looking back to 2014, there has been a continuous increase. We had a little drop in January because of bad weather conditions in the winter, but again in 2015 we can see and we expect a continuous increase. Now, one very attractive sub-segment within the materials sector is our chemicals. The main drivers for chemicals are GDP, the PMI index, consumer confidence index, and commodity prices. I'll just explain to you. We are actually the middleman. What does it mean? You can see on the first picture is an oil drilling site. So they actually extracting raw materials out of the ground, and we are the ones that are taking those raw materials and refining them and transforming them into chemicals that are used to produce items such as tires. I would also like to point out that there are two parts of chemicals. Once they are basic chemicals and specialty chemicals. The basic chemicals are used to produce many different items, whereas specialty chemicals are produced specifically for requests or the need for customers. Now, I would like to go back to the PMI index. Why? Because in general, within the materials sector, the PMI index is not performing as good as we would like. However, looking specifically into the chemical segment, we can see that we are among the top 10 industry performers when it comes to orders, production, inventories, and order backlogs. Now, looking at the consumer confidence index, we also expect it to continue to increase. That means again that that the consumers are feeling comfortable in our current economy. They're willing to spend money, which again means that there will be a higher demand for products and higher demand for chemicals. Now, looking at the commodity index, we can see that there has been a continuous decrease in commodity prices. What does it mean for chemicals? It means that we are utilizing commodities to produce chemicals, and because the price is continuously increasing of commodities, we're actually able to reduce our cost and increase our margins. Now I would like to hand it over to Sebastian, who will go more in depth about specialty chemicals.
Thank you. So, as Natalie mentioned earlier before, that the specialty chemicals is actually a subsector within the chemical sector that we specialize on producing chemicals for the request of our clients. So This subsector has different end markets. We have transportation, we have building and constructions. In transportation, we actually have automobiles and also airplanes, and you might ask yourself, how do we actually provide chemicals for these industries? Within the automobile, the specialty chemicals provide to develop tires, to develop actual windows and coating for cars, as well for the airplanes. We provide heat fluids, also we provide coatings, etc. But you look into the automobile production, we can expect 83.5% growth since 2009 to 2017, which actually shows growth within this automobile production. And in regards to construction spending, we have 51.3% growth to 2017, and overall it's actually painting a positive outlook for the specialty chemicals sector. So as earlier I mentioned the airplanes, and last semester I actually pitched Boeing, and we saw that there's actually a huge demand and growth in production of airplanes. We expect 36,770 planes to be delivered by 2033, and we actually have a market value of these orders of $5.2 trillion. How does this correlate with us of the specialty chemicals? We provide, like I mentioned earlier, we provide chemicals in regards to production of planes. So this expansion of this end market for us is going to create higher demand for the overall sector. Another end market that we have is the healthcare. Now we have the healthcare packaging market and we have pharmaceutical excipients. Healthcare packaging market emphasizes, and perhaps let's say IV components, perhaps packaging for medicines. We provide these chemicals under the specialty chemicals. And we actually expect 57.5% growth by 2020. And also for pharmaceutical excipients, which they focus on acetaminophen, ibuprofen, so perhaps generic drugs. So we expect 82.8% growth within this market. And overall, again, this is actually showing a positive outlook for the specialty chemicals industry, which we're actually engaging on. So before I move on, I just wanted to again remind that we have been talking about a lot of growth within this sector of materials, chemicals, and specialty chemicals. And we actually go ahead and chose a company, Eastman Chemicals, that is actually a specialty chemicals company. And I'll hand it over to David to introduce our company.
Thank you, Sebastian, for that preamble. Now, let's talk about Eastman Chemicals. And Eastman Chemicals is just a very exciting investment opportunity for this SMIF portfolio to diversify it and, to grow and earn. Now, as you see in our revenue breakdown, you see that 50% come from basic chemicals, which behave like commodities, and 85% come from specialty chemicals. That 50% is really the result of maximizing our capacity and vertical integration. Now, to define this company just as a specialty chemicals company, it would be underserved. Really, they are modern-day alchemists, but instead of turning basic metals into gold, what they do is create 21st century solutions to everyday problems through their portfolio of diversified chemicals. And they do this espousing themes of sustainability, energy efficiency, health and wellness, and consumerism as the result of a rising middle class in emerging economies. Now, if you look at revenue, you see that from the year 2012 to 2014, we have experienced an increase of 17.6%, which has translated positively to our core earnings per share, which in the same time period has increased by 29.6%. Now, when it comes to our dividend growth, we have a projection of an increase of 24% to the year 2016. Now, let's talk about our end markets. And as we mentioned throughout the presentation, we touch a lot of bases when it comes to these end markets. And if you see, we have a significant presence in all of them. We're talking about transportation, building and construction, and personal care and health and wellness. Now, on the other part of this slide, you notice that our revenue comes from very different regions. So we are a company that is geographically diversified, which is following the trend of this particular industry. Most of our assets are located in North America, but we have entered greenfield operations in Asia as well as the Middle East. In Asia, because of the inexpensive skilled labor, and in the Middle East, because of the access to the commodities that are needed to produce our petrochemicals. Now, let's talk about product growth. Well, first of all, the company is divided in 5 segments, one of them being additives and functional products that refers to things like Crystex, which is a vulcanizing agent to improve the quality and durability of your tires. You have adhesives and plasticizers, which are basically substances that make plastics more pliable. And what is great about the ones that we produce is that the molecular structure of the plastic is easier on the environment and therefore is a green choice. You also have advanced materials, and that refers to interlayers for windows in automobiles as well as architectural applications like, high rises and brickle. And then you have fibers. That refers to acetate yarn that is used in apparel as well as furnishings, and specialty fluids. And specialty fluids refers to aviation oil and all sort of products that are catered towards the aviation industry. Now, driving our revenue growth year after year, you find these three segments: additives, advanced materials, and specialty fluids. Now, I just want to showcase this chart in which you see all of those important end markets that are growing, and you see our segments serve more than one, or actually this end market is being served by one or more of our segments. This we're going to talk about more when we talk about mergers and acquisitions, but what I wanted to point out is that in our facilities we have multiple segments working together, which facilitates innovation and bringing to market a product mix that is more interesting for our customers and to better serve them. Now, I just want to talk about, so you really understand our product and what our company does, two of our runaway success products. One of them is SafeFlex. This product provides security, safety, and UV protection. Now, this is a laminate that is incorporated into the glass that is used for automobiles as well as architectural applications. And then the benefits that this provides is that it reduces the thermal load in interior spaces. This translates to fuel efficiency, to a reduction of CO2 emissions, and overall, it also has architectural applications. We have high-grade products that make our spaces safer, and our products have set the standard for architectural applications and have met the stringent requirements of places like Miami-Dade County, which is afflicted by tropical storms and bad weather. And if you see, we have 50% of the market share. But we're not content with that, and we continue to innovate and push the envelope. And our product also has a component of improved acoustics. Now, if you look at the demand forecast, Eastman global acoustic growth has a CAGR to the year 2016 of 14%. And if you see, the automobile industry is jumping onto this particular trend. Part of the reason is because we all want to talk to Siri. I want to make sure that she understands what we're saying. So people want to be able to drive in the vehicle, use their gadgetry that is hands-free, and acoustics is something that is really important. Now, when you look at architectural application for the interlayer, you see that there's a significant growth. I'm not sure if it's visible to you, but what is really driving this CAGR of 5 to 6% to the year 2017 is the Asian Pacific market. Another runaway success story that we have is a patented technology that was launched in 2007, and that is a copolyester. It is a form of plastic that had an early adoption in food packaging and medical packaging and in baby bottles because it's BPA free, and that is a chemical agent that is part of polycarbonates, which is negative for your health. But this product, it's fantastic, has a lot of benefits. It's tough, it has clarity, it has heat resistance, chemical resistance, and again, it's a greener choice than polycarbonate. And people are discovering that it has applications in things like technological gadgetry. Now, the growth potential for this product, the CAGR, is 10 to 50% projected to the year 2017. And then I think what is important to notice right here is the outstanding penetration of the product in comparison to our competitors. Part of the reason is not only because we innovate, but because of the tenacity of our sales team, because they understand the innovation and they go out there and they go to all these different brands that are adopting our product and tell them, you know what, I think you could use this, I think this product is great, and I think it could advance your product and really make you bring to fruition the vision that your engineers have. And now to talk about the mergers and acquisitions of this company, I'm going to leave the floor back to Natalie. Thank you.
Thank you, David. Acquisitions play a significant role for Eastman. Because of Eastman's very healthy free cash flow position, we are actually able to engage in acquisition that aligns with our strategy. What do I mean with strategy? In the center of everything is the technology platform. By expanding and improving the technology platform, we are actually able to reduce our production costs. And this also allows us to create synergies that further allows us to broaden the product mix to meet the demands of our customers. Now, as David mentioned earlier, there are three key segments that are driving revenue growth. And all of our three recent acquisitions, they are strengthening those three segments. Therefore, we are expecting that those three acquisitions together will bring us in revenue of 1.2 billion. At the same time, we are expecting earnings per share accretion of $1.10 in 2015, and then from there growing in 2016. Now, before I go into expansions, I would also like to mention that because of Eastman's healthy free cash flow position, we actually acquired two of those companies fully in cash. And Tamingo, we acquired 2/3 in cash and 1/3 through debt financing. Now talking about expansion, again it aligns with Eastman's strategy. As David mentioned earlier, there's a high demand for Triton. So currently we are actually in the process of a capacity expansion of Triton. Although we actually just recently completed an expansion back in 2014 to meet all the demand that is out there for Triton. Now I would like to point out another very important expansion for us that aligns with the strategy that Eastman is following. Currently, the expansion will be for Crystex. Crystex is a product that we added to our portfolio by the acquisition of Solutia back in 2012. We are able to again improve and expand our technology, and that means that when looking at our cost position, we are actually able to reduce our variable cost by 20% and our fixed cost by 30%. And now I'm going to hand it over back to Sebastian.
Thank you. Before I keep going with the financials, I want to highlight that these acquisitions indeed might be an inorganic expense from the company, but yet looking for the future, it's going to create an organic growth as these companies integrate to ours and their product lines incorporate to our lines as well. Also, these expansions are expenses from the company that they're actually they're incurring capital expenditures to incur higher organic growth for the company. So in regards to the financial margins, you may see that yes, indeed, 2013 to 2014, it decreased a bit, but this is actually because we overly hedge for some of our commodities that we use, and it's not because decrease of sales or decrease for demand of our products, which you actually see we have increase for demand, but it's just because of these hedges that we actually don't expect them to continue to hurt us for this year and 2016. And actually, just after 5 p.m., after the market closed, they released earnings, and we saw that EPS beat estimates by 14%. So this means that we are going back on track with our hedges, and our margins will continue to increase. Yes, indeed, I want to bring your attention to leverage ratio, which actually it did double from last year. But as Natalie mentioned earlier, we did an acquisition where we actually financed part of it with debt. And this is all due thanks to our expectation to incorporate new companies and expand our organic growth. We do have our interest cover ratio of 4.07, which actually shows a stability for us to cover our expenses in regards to expenses, and we have a stable cash flow line. In regards to our narrow competitors and the industry as a whole, you may see that a lot of the margins we're actually at par with our competitors, or we actually have higher margins. We did have a return on equity decrease from 2013 to 2014, but yet you see we still actually beat our narrow competitors and our industry as a whole. Again, I did mention about the leverage ratio, which I clarified because of the acquisition. And in regards to price ratios, we actually have a lower price to equity and price to cash flows in comparison to our narrow competitors and the industry as a whole. This actually, as Natalie mentioned earlier, that the material sector is more undervalued than the industry as a whole, which actually can reflect part of this, and also that our commodity hedges that hurt us actually brought investors to drive away a bit of the stock and actually decrease its price levels. Yet we still had earnings. We always kept beating earnings estimates, and our earnings kept growing year over year. And also, we noticed that a lot of the analysis that other analysts did and a lot of the news articles that we read were emphasized on perhaps the acquisitions or perhaps some of the products, but they never really focused on the end markets, as we actually mentioned in the beginning of the presentation. And that is something that we actually see that others are not seeing in regards to Eastman. We see that these end markets of our products and the end markets of our segments, such as advanced materials, specialty fluids, and intermediaries, are growing, and actually we expect that to actually reason to why the price ratios are actually lower than our competitors. In regards to valuation analysis, we utilize a growth rate of 2.2 to correlate the GDP growth and not be over optimistic. And we have a WACC of 9%, which gave us a target price of $95 with an upside of 25.8%. To close down the presentation, I want to remind that Eastman is a company that has been focusing in its product innovation, diversification, and also playing a huge part in end market growth in markets such as transportation, building construction, health and wellness, which is actually driving growth for our demands of products. We are integrating our acquisitions to further strengthen our markets and segments and product diversification and continued expansion to decrease our costs and actually increase our margins. And overall, as a picture, make this company with future growth. And given we actually recommend a buy, target price of $95 again, and upside of 25.8%. So I want to open the floor to any questions.
This was called Eastman.
Yes, they were called as Eastman back in the day.
Could you go over to the slide you talked about on M&A and the accretion they expect from the acquisitions? If I add up the 2015, that if I do the math right, I'm hoping it's 85 cents accretion in 2015, 35, 25, 25.
Oh, did we mention that it was going to be 1.1 for 2015?
Yeah, I assumed you.
My apologies. Then that would be for 2016.
Right. Nope. That I figured out. Can you tell me what the 2014 EPS number was? What do you expect from 2015? And so I'm trying to figure out what is the organic EPS growth. Does this company have organic growth, or is it mainly just a roll-up of the chemical industry?
Okay, so for 2014, we actually had I believe it was 1.80 something earnings per share. Now, earnings literally just were released as the presentations were going. And our earnings per share was 1.84, if I'm not mistaken, and we actually beat estimates by 14%. And we last year first quarter were 1.61 cents on dollar, and this year we actually incremented it to again 14%. So we see this growth on the earnings per share. And something to take into account of this is that the winter weather always decreases production levels, as you saw with the PMI index. So every time we go into the first quarter of every year for us is going to be our weakest quarter. Yet actually, in comparison to last year, we actually outperformed that estimates, and actually we outperformed our last year's earnings per share, which you can actually see we are integrating this company's accretion of EPS. And another detail that I want you to take into account of this is that Commonwealth and Teminco were acquired in December. So this integration is not going to be we all know this and we're accustomed to it, that when we acquire a company, not everything's the synergies are not going to be shown right away. And we're just 3-4 months into the year, and we acquired these companies in December, so we still expect for accretion to continually to grow along the year.
But I didn't hear the answer. So you said in 2014 they
I did say at
about $1.80. What do you have a forecast for 2015? If so, what is it, and how much of that is organic?
A forecast for 2015 I do not have. I do have the actual data that was just released.
But will it grow by more than that 85 cents? Is there anything?
Well, of course, it's the 184 cents per just a quarter. Okay. So, of course, yes, actually we expect earnings per share to be around 7.80.
$7.80.
Yeah.
Versus $1.80.
So sorry, for last year I was talking about 180 something for the fourth quarter.
So what was the EPS number for 2014? Do you know?
Out of the top of my head,
I also wanted to ask about the commodity slide that you had early in the presentation.
Yep.
So the chart shows that for the last 3 months, commodity prices have bottomed out, which is kind of a precursor to commodity prices starting to rise. A big part of your thesis in the presentation is declining commodity prices. Can you talk about the risk factor if that chart turns into a V, commodity prices start to go back up? What's the risk factor here, and would you still, have a buy rating on the stock if I told you commodity prices were going to start going back up again?
Of course, the company was always profitable before commodities continue to decrease. So therefore, when commodity prices go back up to levels that they were before, we expect to increase the price of our products, and also the price of production increases, but yet we continue to keep those margins that we always kept. And if you think about it, we're continuously hedging. So we're going to hedge and actually fix these prices of lower commodities towards the future that's coming. So we're going to actually continue to keep those margins higher. Indeed, we're not going to make the mistake that we did before, that we already hedged for propane, but now we are going to fix these prices. And yes, you do say that it's going to have the B shape that is going to back up, but this company has been around for a while, and we've been up for a while in those times that the commodities were high and we're still profitable. So when we go back up there, there's no reason why we shouldn't be profitable again.
I was glad to hear that they're working on or have the BPA-free plastic alternatives. People your age and somewhat older, like my daughter, when they have kids now, that is something that's extremely important to them, and it's within their group. I don't know about you. She has like 1,000 friends on Facebook, and they all talk to one another about
just a little bit more.
You have a little bit more than that. On the other hand, I think a black swan for these chemical companies, and as a side note, my honey, she is in environmental health, and there's a lot of research going on now in terms of the effect of chemicals on the workers, as well as, of course, sprays and that. And I can see, maybe not in the short term, but in the long term, chemical companies losing a court battle on the effect on health of some of these workers.
So I'm glad you. Is that a question or just?
I was going to say why I will vote for this short term. You didn't say anything about the risk. What the risks are.
I want to address. Well, actually, I'll hand it over to David or Natalie. That you did mention that this chemicals company actually engage in perhaps chemicals that might affect the workers or might affect perhaps also the environment as a whole. Because we know there's the organization called EPA that's always constantly increasing regulations for these companies and overall. But you guys want to talk about the sustainability and the awards we've actually won in regards to such?
Well, I just want to talk about the commitment and the pledge that this company has. This company has a pledge that 2/3 of its revenues of future product launches will come for items or for products that are the greenest alternative possible or sustainably advantaged element. And there's a firm commitment to that. We have won multiple awards. Could you please address the awards for me?
We have actually multiple awards compared to our competitors. We are always getting recognized for the fact that we actually paying a lot of attention to sustainability. So when it comes to our products, we're always paying attention. I mean, like on the one side, in regards to revenue, we are able to reduce our costs because we are sustainable in regards to energy costs, those kind of things. But also looking into the chemicals, that we are paying attention that those risks are hedged because you're paying attention to sustainability.
Let me add something on. You mentioned something in regards to BPA, in regards to our Triton product. We actually have that product patented, so therefore other competitors cannot engage in those activities that we're actually engaging with BPA-free products, which actually are giving growth and much more strength and stability to our company. And you also mentioned that you will invest this company in the short term. Again, the company looks great right now to invest in regards to it is underpriced. I want to bring that back. I want to mention something in regards to that I mentioned earlier, and want to emphasize a bit more on it, is that again, we saw a lot of news and articles and analysts talking about just the product and acquisitions. They were not seeing a lot of the growth that we are seeing on an end markets. End markets, remember I mentioned transportation in regards to automobiles, airplanes. We also had construction. We also saw health and wellness in regards to pharmaceutical packaging and pharmaceutical excipients. And this is something that we see that is driving a lot of growth and demand for our products, because not only Triton, not only Saflex play a part on those markets, but a whole part of our diversified product played a part on this, and it's actually driving a lot of growth. And this company actually is stable right now, is giving good profits and margins that we just released. So in the future, we are going to continue to make better hedge movements to better give stability to the company, and we've been profitable at high commodity prices time. So when you say in the short term, I would perhaps rebuttal that in regards to that, because we actually do see expectations for demand growth. It's not that our demand for our products is going to decrease, the demand from our end markets is going to decrease. All we see is growth and demand on all sides for this company. And we not only grow from one side, but we're diversified in all sides. So we see growth in all sorts.
And I just also would like to mention that within the past 5 years, our dividends has increased as well. So this is just a good reflection of how healthy and stable our company is.
Sorry, I just wanted to add something to the final rebuttal for our company, and that is that independently of the numbers, the company's products are emphasizing an element of innovation, but the element of innovation is attached to sustainability. And again, that is something that is not only part of the regulatory environment, and we're responding to it, and we're ahead of the game when it comes to that, but it's also a narrative that is expected of products from our consumers. And so we continue to do research, we continue to innovate, we continue to incorporate and to cater to that green consciousness. In the past, chemical companies made money in spite of nature, but now we're at a time in which we're making money holding hands with nature, because this is the last generation that could have a significant impact in our ecosystem for us and for future generations. As a matter of fact, I work for the One Hotel in South Beach. This is a hotel that has a projection of building 30 hotels within the next 5 years. It's part of Starwood Capital. And their entire ethos as a brand is the idea of sustainability, is the idea of green living, is the idea of using materials like the ones that we are producing, which are green, which are good for the environment, and that will, make a better world for future generations and for ours.
I hope so.
My question goes to, are you operating your customers, you're exporting and importing raw materials, exporting finished products? Do you have a global market? And if so, then what kind of exchange rate risk you might have with the strengthening dollar, depending on your mix?
Correct. So as you mentioned before, that we didn't mention some of the risk. Some of the risks that we do have is, of course, the currency exchange, but we are not the only company that's actually been affected by it. If you want to talk about it, most of the companies that might be pitched tonight are affected actually by the currency exchange, by the dollar strengthening and the other currencies devaluing in regards to the US dollar. We're actually showing profits increasing, yet we're still having a strong dollar. We do operate in different parts of the world, although we do have 46% of our revenues derived from the United States. So we do get affected by it, but we're still showing stability in regards to that. And when we look at our competitors such as DuPont or Dow Chemical or perhaps Westlake, they're all being affected by this. But as you saw that in our relative valuation analysis that we have, you see our margins, you see return on equity is actually higher than our narrow in our industry, that you see our gross margin is in par with our narrow, and actually even the margin is higher than our narrow in industry. So if you think that in regards, our job is to find this company that is a hidden gem within the material sector, and within the material sector you see that our company is outbidding its competitors, and they are being affected by the currency, but yet we are still holding our strong margins.
Yes, I would also.
Can I ask a quick question? You've emphasized growth in end markets and market demand, and yet 15% of the revenues is to tobacco. What way is that market growing? Are they getting market share with manufacturers? What is it?
What we're actually doing.
And how is that green?
Well, that is not green in the sense that. Yeah, stop there. No, but in regards to actually expansion and with that we actually did a joint venture with a China tobacco company where as you all may know that China's middle class is growing, and David emphasized earlier that we're a company that we emphasize on providing chemicals to companies that provide products to middle class. So the middle class in China is actually expanding and growing a lot, and as well in Asia. So we actually did this joint venture with the Chinese tobacco company to expand our fiber, this falls under the fiber segment, to expand our production and actually be able to reach those markets which are actually growing. So, yeah, does that answer that?
I've got a question on the strategic plan for the material sector. BP, which I presume is aviation fuel.
Yeah, it's right there, aviation fuel.
How is that acquisition part of the strategic plan for a company that's buying a lot of this material? Is that something they did because they had the excess cash? Because I cannot reconcile why they will buy an aviation fuel company, which are normally in small airports to provide fuel to jets and airplanes.
Why we would buy it?
Yes.
So again,
is there anything that you have on that or not?
Yeah, of course. So I'm glad you asked that, because from last semester I was able to analyze the airline industry, specifically the aviation industry, and I didn't have a space and time to include a slide in regards to this, but we expect passenger travel growth to increase a lot in regards to all sorts of parts of the world. So as you say that these aviation fluids are incorporated in the airport and are inputted into the airplane at those places, and when we expect travel growth for passenger travel growth for airline companies, we expect more flights, therefore more demand for this aviation fluid. So that's why we consider it a strategic investment for the company, especially in regards to an acquisition.
This is not jet fuel, it's hydraulic fluids.
Correct.
Okay, that's why I was asking if it was aviation fuel.
Exactly.
Fluids.
Yeah, we already had a presence in the market before, and so what we're doing is acquiring this division and extending, the product portfolio to better serve our customers.
Look, he's ready to vote.
Move that we take a vote.
Yes. Alrighty, thank you. Great job, guys. Thank you. How many in favor for the company? 1, 2, 3, 4, 5, 6, 7. Everybody. Wow. Okay, great. Good.